Good morning, everybody. Hope you had a great evening. It was a cool day here yesterday. We actually had some rain, spotty, in our area yesterday. We'll get some more rain today. Again, it'll be spotty, isolated thunderstorms, but it certainly cooled us down from 100 to the mid 80s, which was quite a treat at this time in summer. Summer's supposed to be hot, but every now and then Canada will share some of its cooler air with us, and it's welcomed here on the South Central Plains. The heat up begins next week, and all this hot weather that we experienced last week, I see, has moved east of the Mississippi, and you'll have humidities to match the temperature, so you're in for a full week of summer. Today's going to be an interesting day. There's a couple of things going on in the options market this week, and we usually don't see this in treasuries until tomorrow when the auction is completed, but the play has been puts, and I mean massive buying of puts. We have China's markets. If the government doesn't intervene on that particular day, China's markets are down. So the Chinese markets are down. The big short squeeze, the FOMC announcement, the tendency of the stock market to rally into that announcement and post the announcement, and we played it for the last 2 days. Our bias was to the upside. Will it trade higher today? The economic news is decidedly mixed. The macro news has really been below forecast. Most of the time it is. They say like 90% of the macroeconomic news comes in below forecast around the world. And today we have our newly revised GDP numbers, which I think the market will sit back and see what kind of a fudge factor is our government building into the calculation of the GDP numbers to arrive at the answers they want. You know, if you have an answer that you want, you can calculate it backwards. So these are supposed to be healthy revisions to the GDP to more accurately reflect what's going on. But what the government, this administration's meme is by God, more people have been put back to work than any time in history. The recession, although it was longer than we liked, is behind us. We've got great economic growth coming, and they need numbers to support this. So they get the unemployment numbers down to 5.3, 5.4 by not counting people who have given up looking for work. The housing start numbers are really skewed to the multifamily. They show growth. Yeah, look at the housing market. Well, they don't tell you that mostly it's multifamily. They don't tell you that home ownership is as low as it's been since the 1960s. They don't tell you that rents are increasing faster than the economy is growing and faster than inflation. And why is that? Because there's a lot of demand for rental properties. So the economy is not recovering anywhere close to what the government's going to tell us it is. But that's okay. You know, for us, we don't have to know who, we don't have to know why. We can just see that it's happening, that they are, and we join them. And that's our F1 screen. Then we further refine it with our F2 screen where we pick out so the idea comes from the F1. The levels and confirmation of the idea come from F2, F3 or 4. Execute, F5 or 6. Monitor the auction process. It's pretty simple, it's pretty fast, pretty quick cross-check, and because it's based on the profile, we happen to be right about 70% of the time for our first call of the day. That's pretty damn good. So what do we have today? We have, after this GDP news right here and the head scratching that will be attendant with reading and examining how they came up with that, we have the 7-year auction. And the first auction is usually up, so the 2-year is at 26.29. Yesterday's auction, I think, took place at 21. Yeah, 26.21. So the 5-year was down 26.21. And that would make today's 7-year auction, or today's close, projected to be at 26.25 or better. So I like the market. I like it to the long side. Now the overnight session low is 13. We're currently at 19. So I'd like to buy this 12 to 16 area. Somewhere down here and leaning against the value area low, 14.5. Seems like a pretty good number to me. Then 5 to 9. I like the buy side today for buy 2. And it's because of the 7-year auction and the fact that the dealers have to support the market. We got volume at 25.5. We have the last rotate up yesterday at 29.5. So this 26 to 30 area looks like pretty good resistance. The overnight session high is 24. So 23, 27 will be sell 1. 31 to 03 will be sell 2. But I do prefer the long side and would like to buy into weakness, and our first reaction is going to come with the GDP numbers. Then I think the focus is going to shift to, was yesterday's buying in the stock market for real, or was it just the play and the standard play into the FOMC meeting and announcement, which is to be long? And we should get an answer to that today. Zero Hedge says the best reason for going short today is that Gartman is now bullish. They beat up this money manager unmercifully. So he just gets nailed on a regular basis. And he really does a great job of timing. He gets long at the tops and he gets bearish at the bottom. And so he would be, in our world, a guy that requires so much proof that the market's going up or down that he's late to the game. And yeah, you wonder how he survived in the money management business. Probably because he got long in the 1980s and he's been in a long-term bull market and all he's had to do is buy the dips. Okay, pretty clean break in the market in this area up here, the 14 to 16 area. We got pretty good resistance at 8 to 16. We're at 53.30, so 3 to 7, maybe 7 to 11. Sell 1. Like to get it done at the upper end of the band, and then 15 to 19. Sell 2. The knob spread came in last night. This number is very, very aggressive. It's very, very close to the market. It's where we are right now. On the buy side, bottom of value is 19. We're currently at 31. We've got the VWAP at 25. So buying 21s to 17s, buy 1. And then 9s to 13s for buy 2. I do like the long side of the market better because of the auction. We do have news on the half hour to get through. Gold got whacked yesterday. Risk off investments are out of favor. The retail account continues to buy gold with all their spare change, and there is large institutional selling. So we're back down to our 75 to 80 as support. So buy 1, 80, 82. Buy 2, 75, 77. On the sell side, the spill came from 90. So 89, 91, sell 1. 95, 97, sell 2. Can't fight the tape. We've been bearish on gold for a long time, not for any exceptional fundamental insights into the market. It's just we come in and we look at it, and the structure and everything says find a place to sell it. And again, that's the beauty of our way of looking at the market. You really don't have to know who's doing what to whom and why they're doing it. You just can see that they are, and you join the capital flow. You join the big money. You execute with the exchange members or the locals of old. Okay, currencies. One day the dollar's down, the next day it's up, and that's pretty much the pattern that we have. So every other day you're long or short. Nice work, right? I think the long-term trend for euros is still down for the reasons we talk about all the time. The European Central Bank, the European Union want the euro lower so they can export to people outside of the European Union. So here we are at 60. Last rotate up stopped at 82. We didn't quite make it to the buck, so we'll make 80 to 90. Sell one. Maybe as high as the buck. And then last rotate up yesterday stopped at 39, then at 15. So 15 to 25. Sell two. And I'm keying off this level here. And that level right there, this is the preferred sell zone. This is the near sell zone. That's 85 or better. On the buy side, we've had buyers below 50. So 40 to 50 is where support is. That's buy one. And we'll make it 15 to 25 for buy two. Really don't like the long side of this market, period. But we can trade from the long side. You know, this market rallies 1.5 to 2 points. Go buy the put 1.5 to 2 points away. It's just a really good trade. Wait 2 days and you're probably happy. Okay, crude held yesterday's late gains. We have a buyer here in the 48.50 area. We're at 98, so 48.50 to 25, buy one. 47.75, 47.50, buy two. 125 points takes us down to the 48 level. 140, 150 takes us that 48.75 area. So we'll give it a little bit of room. We're having trouble taking out 49 and a quarter, so 49 and a quarter, 49.50, sell one, 49.75, leaning up against 50. That would be a good trade, would be sell two. And 140 points takes us from 48.60 to 50, even. So a lot of stuff comes together at 50. Rich said he would be in. I believe Rich is going to be in today. I will double check that. 11:30 Eastern. If you're new to trading and you're really nervous about being able to make it, this market has everything going for it. It's an extreme example of a go with market, which means you're buying higher highs and you're selling lower lows, and you usually have pretty instant gratification. The trades really develop quickly. And that's good for a beginner. Buying into weakness, selling into strength in the financials requires a different take on the market. It requires more homework. It requires you identifying areas where there might be an advantage being long or short. And when you first start out, you don't have those skills. Emotionally, psychologically, or intellectually. And now to the most popular market in the world for beginning traders. When I first joined with Pete Stedelmeyer, and I repeat myself, because why do I repeat myself? Why do we keep hearing it? It takes a long time to learn something. I am getting up in my years. My kids tell me I'm prone to repeat stuff, but there are points to be made, and we have new people coming through the room all the time. So I'm not going to use old age as an excuse. I'm going to use new people coming through the room all the time. But this market, when Pete was counseling us, and we all have mentors in this game. If we're going to get good at something, we're going to need a mentor, and he just speeds up the learning process. He doesn't stop us from having to learn the process of trading, but he shows us where to look. And we asked Pete what we should trade. And I was a stockbroker, so with a heavy institutional business. So the first thing I started out was in the E-mini. But Pete said we should trade corn. And back in those days, it would take a week for corn to move a nickel. And he says it'll teach you patience, it'll teach you how to back your trade, and the tuition costs are about as low as you can find. well, needless to say, very few of us traded corn. But we did take a hard look at the financials. And that's where most, if you really get in this game and if you have some exposure to the treasuries, there's a lot going for them that you don't have going for you in the E-mini. The biggest negative is they're a responsive market. They make you buy weakness and sell strength, and that's tough to do. So the E-mini is the last market that you should aspire to trade in because of all the damn games that are played. Makes it tougher. The name of the game in the E-mini is bring new money in continuously. You can see how the CME advertises. They're everywhere. Everything is couched in terms of the E-mini, the Dow, or the Russell. Some of those are not traded on the CME, but they need that fresh infusion of retail account money to keep everything going. And so spoofing, false orders, gaming the system, moving a tick or two out of sight of current support or resistance to gun stops is what these guys know how to do, and they do it daily, and they're really, really good at what they're doing. So we have this rally, FOMC only, or new buying because of improving fundamentals. Today's GDP number, and again, this might just bring a pause. 2.9, looking for upward revisions all the way back. The new numbers, deflator 1.5. Commodity, the commodity index is off 29% on a year-on-year basis. Hard to make the case for inflation as far as raw material costs go. Jobless claims 272, that's kind of their default number, 275 plus or minus. And natural gas inventories at 53. So FOMC rally only, or based on improving fundamentals. Okay, resistance, they usually, we got enough volume up here that they ought to retest this area, go back up. So getting stops above the overnight session high, so we'll start out with a 4 to 6 sell, then a 9 to 11. On the buy side, support's at 95, so 96, 94, maybe stops beneath here. Buy 1. And then 91.89 for buy 2. Gonna take a bit to get everything up and posted today. I'm gonna get busy on it. I'll see you as soon as possible.